If we're taking a look at the 1 minute chart of the S&P, this is a day trading discussion. I'll always day trade on the 1 minute chart, and I will always look to identify the support and resistance using the V-score on our charts. And you'll notice the V-score was sitting right around a -2 this morning. Now, one thing I will say, wherever you've anchored your V-score, and my V-score is anchored to 7 a.m. Eastern, that initial reaction is usually a little bit of noise. If there's any noise, it's going to be right around the anchor time. Notice this low right in here. Notice how we nailed this low right in here. And that was right after non-farm payroll. That was actually a move right after non-farm payroll, which was kind of neat. And a question that I get sometimes is, do you trade before the bell rings? Not often, not often. But if I'm going to play some sort of exhaustion, that's in many ways going to be a post non-farm payroll exhaustion. It's super aggro, but it's a question that I get, whether it's initial claims and an HPMR, which is also a first come, first serve. You can look at the V-score for a first come, first serve setup, which is looking at a major event, looking for a volatility reaction to that major event and fading it, in this case, a buy. All right, so then the next thing that we saw as we kind of progressed through the morning, by the way, we have bullish directional bias. So not for one moment at any time should we be bamboozled into shorts in this market. Just say no to the shorts, right? We're thinking about only the long sides. So lows are support, and they're more about the buy zone that we're focused on. So if you keep a one-way view of the market, you're going to be a lot more successful, I believe, especially if you're learning how to day trade. Once the bell rang, the challenge today was that we only had a retest. And I would say that for something like the ES, your best bet was to focus on the SPY calls or micro for the long position. Double green at the time, breach, we see right here, pull back into the wave and pull back to the clearing range high. That's an aggressive but valid buy all the way. Now let's take a look at the Dow and do the same thing. V-score lows. Now, you might ask, is this a first come, first serve? Yeah, but let me show you, right? Look how much more volatility you had to sit through if you wanted to do that pre-market. So this is my warning to everybody. Can you trade aggressively pre-market? You can, but they're not all going to be as crisp as that ES. This was still a decent trade, but look how much heat you took before the market finally found support and headed back up higher. All right. So keep that in mind. I don't want to always show some best case scenario and everyone thinks, great, we'll just trade pre-market, and it just is that pinpoint support accurate. So I like to show both sides of that coin. Now, let's go right back to our post 9:30. There's our breach. Boom, right there. There's our retreat. Now, would I call it a retreat or a retest? I mean, this is, if we're in the zone above our Fibonacci pullback, this is probably more of a retest than it would be a retreat. Okay? Now, I don't care what you call it. You can call this a peanut butter and jelly sandwich or this a ham sandwich. It doesn't matter. But the idea is, the further the distance from the opposite end of the range, the further this distance, the more your risk. The more you should think about smaller position size here, sort of small, medium to maybe large. And then position size wise, my largest position is going to be as close to the point of validity as possible, right? Because that's where I've got the least amount of risk. So that's a quick walkthrough of the way in which we can look at day trades, control risk, and these were both aggressive. You know, usually I'm pretty conservative in the room. I prefer to be conservative, but this is where I think for traders who like day trading options and who like day trading micros, I would say the early part of the morning is definitely better suited to the micro, right? You could definitely do the micro down in here, especially with non-farm payroll, the reason for the volatility, right? And then here, I would either focus on a very small futures position, again, using micros or a small number of minis, or the options, okay? So think about that kind of fluidity between asset classes using these setups, which is what makes these setups so great. Once you understand these setups and time and timing and volatility events, you can do this in any market. You can do this in any stock. You can do this in any ETF using different types of tools. And that's definitely, gang, what I love teaching you guys here in the futures room, that fluency in multiple asset classes and the fluidity to be able to move between them. So that's really where this gets exciting with this sort of futures first perspective.